Hello, this is Will from Will to Trade. You can check me out at willtotrade.com. Fill out the form, get invited for a 2 free week trial to our chat room. We chat every day, Monday through Friday. We talk about stocks, give out alerts, and let people know what stocks are in play. And of course, from time to time, I do make some videos as well, letting people know what's going on with the different stocks and ideas about how to trade them. Today, I'm making a series of videos because I haven't made videos for a while. And I wanted to showcase some of my rules and ideas for trading, which I'll put up on the screen right there. So these are the 3 steps to making money trading. Step 1, know which stocks to trade. Step 2, know what price to buy. Step 3, know what price to sell. Sounds pretty simple enough, but if you follow those 3 steps, if you're able to follow them correctly and accurately, you will have success making money trading. The type of trades that we want to take, 3 different types of trades, breakouts, groundhogs, and retracements. Breakouts, of course, being the simplest, the easiest trades to take, groundhogs being a little bit more complicated, and retracements being a little more complicated than the groundhogs. And groundhogs are simply groundhog day trades or trades that are range bound. If a stock is going from, say, 150 to 180 and then back again from 150 to 180, you could buy it at 150, sell it at 180, buy it back again at 150, sell it back again at 180. And the type of trades not to take would be the 3 or the 4 C's, the chop, the chase, the chatter, or the crap. All right, so let's talk about IPI. IPI, this was from yesterday, December 9th. IPI made a quick move. I did alert it in the room, and I did trade it. And it's a stock we've actually alerted before a couple days ago. It also made a really big move, a very slow and steady move throughout the day. Yesterday, it didn't make a slow and steady move. Yesterday, it made a quick pop up and then a quick pull back. So let's take a look at it. This is our 1-minute candles. Earlier in the day, it wasn't really doing much. I mean, it kind of went up, pulled back, went up, and then kind of moving range bound. But this is a place I would recommend not to trade it because it's just not a consistent movement. It's not consistent candles. It's not a massive volume. There's no real immediate news on it. There's no reason to trade it. So it's definitely not a stock to trade. Let's fast forward the next couple candles to say right here. So right about here, I actually saw it. I actually saw it on my scanner. And I saw that it had moved up, and as you obviously can tell, it definitely made a move up, and the volume kicks in. Now, if you happen to have been watching IPI before I was, if you were watching it before this first push, you would see that here's your previous high of day at, 254. And if you happen to have been watching it there, maybe you were lucky enough to buy in at 255. Okay, so I'll just draw a line here at say 255, and we'll call this we'll make it like a dotted yellow line. So if you were watching this because you just are glued to IPI and you had seen a move on it earlier in the week, and you're like, you know what, IPI is one of the stocks that I'm going to watch every day, every tick. Every little tiny move that it makes, I'm on it. Then maybe you would jump in here. But the average trader is not going to be watching every single ticker, every single minute. You're using your scanners to show you what's in motion, what's in play. So if you're on IPI, you're buying here. But if you're like most people, you probably missed this first push. If you missed this first push, then you would be thinking, okay, all right, I think there's a trade to be had with IPI. I missed the first push, but there could be at least a second push. I don't know if it's going to be a second or a third, but there should be at least a second. So now this becomes step number 1. Yes, step number 1, a stock to trade. This is a stock to trade. Now step number 2, we got to know where we want to buy it. So we look at the candles to give us some ideas. We know that it had gone from 255 all the way to 273. So now I would start to draw some more lines. I'll draw a line at 270, and I'll make this a blue line, and then I'll draw a line at say 260. And I mentioned this in the room. I would really want to buy between 260 and 270. If it can pull all the way back to 260, yeah, I would love to buy it there. If it doesn't, maybe I could buy somewhere in between here, if not 270. But I wouldn't really want to pay more than 270 for it. So this becomes your buying range. So let's just fast forward to the next candle, see what it does. It didn't do much. Volume tapered off. Next candle, it pulled back. It pulled back to 265. So it's in the buying range. And in the buying range, you certainly could buy right there. If you did, it would be an excellent buy. If you drew your line at 265, sort of split the difference, and you got filled right there at 265, it would be great. Otherwise, we're going to wait. Now becomes the perfect time to keep your line of 270 going. This is if you didn't get in here, you have your 270. Now, what you would do, and what I did is I placed my order for 270 because here at 270, now I know, again, one of two things is going to happen. I know that this stock is either going to pull all the way back to the 255 or 250 level. If I place an order to buy at 270, I would never get filled, and that's okay. Or it's just getting ready to push through 270, and if it pushes through 270 and then it pushes through the previous high of day, I know it's going to make a move up. Now, I'll draw a couple more lines up here. I'll draw one at 280, and I'll make this a dotted blue line. Okay, dotted blue. And then I'll draw another line here at $3. Okay, so draw this up here at $3 and make this a dotted blue line as well. So basically buying here at 270 is an excellent place to buy if you miss this place here, if you miss all this opportunity here, and then 280 to 3 becomes sort of a range to sell. And again, there isn't an absolute mathematics to it. It just figures, okay, well, if you get in at 270, you want to make at least 10 cents up to about 10%. So somewhere in that range would be fantastic. So we'll fast forward, and sure enough, it does that. Now, again, I alerted this in the room, but this happens so fast. I mean, look how fast this happens. I mean, it zips up within 1, 2, 3, 4 minutes. It pulls back within 3 minutes, and you really only have that 1 minute to buy. If you miss this, then you already missed the opportunity. And this is why I want to make videos in addition to having the room, because I want to help you become an independent trader. Because you may not be able to grab all of my alerts, but you can understand how you can make these trades on your own, how you can find these opportunities, how you can draw your lines and set them up. So if you buy in at 270, which I did, you have your line at 280, and you see, wow, we got to 280 really fast, and then it pushes up one more time, and then it gets closer, and then sure enough, right there, it squeezes just a little bit above 3. It goes to 304, and I mean, look at what an amazing run up it is. I mean, it's really fast. It's you're in on this candle, and then you have 1, 2, 3 more candles in your sell. This whole trade happens in like 4 minutes. And we'll draw a trend line just to show you what the trend looks like from here to there. Yeah, that's a pretty sharp trend up. Now, what we would do is we would draw another line, say at 305. Okay. All right. So let's go back into here, and we'll make this another we'll make a solid blue line. So we have a bunch of lines here. We have our sort of range to buy if we missed this amazing place to buy, because volume kicks in right there, right where it breaks through this first part. Here's our chop. Here is the place to buy. And then this is a big range, but here's our place to sell, basically anywhere up in here. A little profit or a lot of profit, it's all good because it's moved up. Now it squeezes up to a high of 304, but notice this is a really long wick, and this really big long wick tells me it might not have that strong of a continuation, and this trend line is so sharp. But I'll draw a line at 305, and I'll say to myself, you know what? I'm not going to buy back in again unless it gets to 305. If it gets to 305, why not? I'll take a spin on it, because if it gets to 305, it's above the previous high plus a penny of confirmation, and maybe it could get to 315, 330, 350, maybe even $4. But otherwise, I'm going to wait. And sure enough, look at that sharp pullback. So I alerted to sell between 280 to 3. Again, that's a big range to sell, but I alerted to sell there. And sure enough, after it hits 3, it pulls all the way back. So you got to be really quick on these here. And then it pulls back some more. Now, I'm going to go ahead and shift over to the 5-minute view. And then we'll look at this on the big picture. This is the entire day. These dotted blue lines are basically places to sell. The solid blue lines are basically places to buy. This gold star, the dotted line, is if you were really, really on it. I would not recommend trading in here because this is the chop. You know, you're thinking, okay, I missed this move, but I'll buy here at 275 in anticipation of back to 3 or anticipation of 3 plus. That just becomes the chop. The only other trade you could take on this, and I wouldn't really recommend it, I really wouldn't. It's a more advanced trade, but you could, is the retracement. And the retracement is basically this dotted gold line where you basically wait for it to come all the way back to its very first point of takeoff, which is 255. And then you would basically buy here or buy here, and notice how it kind of, you know, besides for this little wick down at 250, I mean, it finds some support for sure at 255. It never even makes it back up to 280, and 280 was sort of the beginning of the range to sell. So in theory, I guess you could have bought it at 255 and then sold at 280, but it never made it to 280. The best it did was get to 270, 274. You could possibly take this trade, but this is a longer trade. It's not as exciting of a trade. That's why it's the third type of trade we want to take. Number one being the breakouts. This is where you want to trade. This is, you know, just to zoom in on this. Actually, we'll zoom out a little bit. This is the moves you want to take. These are quick moves that happen really fast, but you find them because they're on your scanners. You draw lines of where to get in because you understand sort of the initial points of support, and then you draw lines of where to sell, kind of knowing those points of resistance. So hopefully this video made sense. If you liked it, give it a thumbs up. If you loved it, go ahead and subscribe to the channel. And if you're interested in joining our room, just go to willtotrade.com, fill out the form, and we'll get you all set up for a 2-week free trial. Thank you so much. Have a great weekend. See ya.